It's funny, Michael, because even though this number is expansion, it missed the 55, and that was really what the market was looking for today.
Yeah, Lonnie, it's all about expectations at this point. The market has decided that the economy is rolling over, and a weaker PMI, even if it's still positive, helps confirm that number or that feeling. Take a look inside the number here, and you can see the chart I have shows that the ISM non-manufacturing index is up. It is still positive, but it drops a little bit to, as you said, 52. The new orders index and the employment index both fall, and that is a significant contributor to what's happening in the markets, because the new orders index falls by 6 points, and that is a very big drop, almost 3-point drop for employment, which will probably figure into people's expectations for tomorrow. So at this point, it looks like the services industry, which is more than twice the size of the factory industry, the manufacturing PMI, of course, bad last week, also confirming that there is a slowdown underway, if not an outright contraction.
Mike, the reason this is important is that we're starting to get evidence that maybe the U.S. consumer is something that we need to worry about. I was talking to Charlie Evans a little bit earlier on in Madrid. He was talking about the fact that the U.S. consumer is holding up. Any evidence that that is going to be a problem? The Fed's going to have to react. The market's baking in October. Do you think this makes it a done deal?
No, there's still a lot of data to come between now and the end of October, Guy, and particularly tomorrow, the jobs report and the earnings report. If you look at today, we got the jobless claims numbers, and I brought along a chart of that. You can look at it either way, good news or bad news. Jobless claims were up by 4,000. They're still extraordinarily low, and continuing claims that represent people who have been getting jobless benefits for some time are still going down. It's just that the jobless claims numbers have now been up for 3 weeks in a row, marginally up. So, which do you want to argue? They're still so low that it isn't going to affect the consumer yet. The question is, do the reporting of gloom, does the stock market fall start to affect people's confidence?